Hey guys, Pete here. I just wanted to review my two trades today. So I ended up taking two trades. I first started off with 0 DTE SPY puts, and I'll show you why. And then from there, I jumped into Apple puts. And if you've been watching my videos, you know I've been watching Apple for a while now. And it reached the level that I was looking for. So it gave me high conviction in the trade. So let's quickly jump in. I'm going to jump into Apple first, actually. And so just to recap this mess here on what you see here. So we could see here back in September, we created this daily fair value gap, right? So this is an imbalance. So we had this wick here, we had a big push down, and then the next wick here. From there, we tested this 50% range and then fell. So that was bearish, right? We then created and generated this sell side liquidity before pushing up and before testing this fair value gap as an inverse fair value gap, which is actually bullish. And I should actually change the label here. And I want you to just see how powerful fair value gaps can be. That's why it's my strategy. I use them for entries and I use them for exits, especially when they line up with fibs. So see here, we came up here, retested this high, came down to test this inverse fair value gap, came to the 50% range. I have all my fair value gaps, by the way, with this dotted line marking the 50% range because that's the discount range. That's where institutions load up. They want to get it down there so they can get a discount price. So then came back up. And what did we do here? This was what I was tracking, right? We created relative equal highs. And relative equal highs and relative equal lows tend to be what? They tend to be magnets. And so we kept generating this buy side liquidity here. And then after this, we came back down. We fully filled this fair value gap before launching again. We launched. I knew we were going to take out these relative equal highs. And I figured once we did that, we would probably take out all-time high buy side, which happened to be, if you drew fibs from this low to this high to this low, ends up being the golden pocket extension. So when I saw this morning that we made it up here, I looked at the reaction and I also saw that we gapped up. So I liked the risk reward of jumping into puts, and I ended up closing out at, they reached 77%. I ended up closing out at 70%. And I had next week, so I gave myself some time. I could have probably held on longer. I'm sure I think we're going to come back down to this 229 area, if I had to guess, but I was happy. We took out the relative equal highs. In this market, I'm not going to be greedy because who knows what the heck's going to happen tomorrow. So, and it's also expiration tomorrow and it's OPEX week. So I wasn't going to hold. All right. So that reviews my Apple trade. And so, also why I closed out. You can see it was relative low volume on this pullback. So I wouldn't be surprised to see maybe another retest of this area, and I'll look to re-enter my puts if that happens. All right, so let's jump into SPY now real quick and review that trade. Yeah. So this morning, sorry, where are we? At open, I had a bearish bias or slightly neutral, pretty bearish though bias going into today just because of how extended we were. And so what I was originally watching, I think, watching either the 5-minute or the 15-minute. I think I was watching the 5-minute, and I saw this reaction here. And I said, I bet, it builds a breaker, and I bet that there's going to be a fair value gap. And if that happens, it's going to be a great entry for a short. And so what ended up happening? Exactly that. So this is a sell model. This is a high conviction trade, right? So I was patient. I was waiting to see how it reacted to these levels. And then boom, again, we created another fair value gap. So you could see there was one here, kept testing, kept rejecting, tested, rejected. And then we came back up, and this is where I entered. And I wrote it down, I believe to here, when we started taking out these sell side levels, this is where I really started exiting. Because again, in this market, and it was 0 TTE, you never know what's going to happen. So I ended up selling here, and we chopped here a little bit. Now, obviously, I regret it because I sold at, I think it was like 50% gains, or 60, I don't even remember. But then it went, I don't know, like 300% if I held on. But what I really wanted to just show you is just why, like, if you look at this, when you see this type of reaction, when you see a harsh sell-off, you want to wait and see. We're going to create a fair value gap. That fair value gap is probably going to give you a great entry. And I haven't tested this out, but let's even see here if got a standard deviation move. So it actually went below this, but yeah, pretty spot on. Gives you your target. What I was targeting then from there later in the day, and actually, so I first took the SPY position, and then that gave me conviction to jump into Apple puts too because of how weak the market was. And then you can see here we bounced at the golden pocket, drawn from these lows on October 10th to the highs here. So that is going to lead me to my next video. I'm going to record a SPY and QQQ video to kind of give us a plan for the rest of the week. So I'm going to separate these. So this was a trade review of Apple and SPY from today, October 15th. And then next I'm going to record a SPY and QQQ video to just help us come up with a plan for the rest of the week. Thank you.